A gracious good evening if you're watching this Sunday night. This is the Rose Universe recap after decision two, before decision three. Um, you'll see the graphic I've got put up today, which is an interesting one. This is the theme of our recap today. I talked to a lot of the validators and a lot of the members. One called me somewhat late. A couple teams were late in validating, not past the deadline on Saturday at noon, but later on Saturday. So it took me a little longer to get this recap done, generate the images and all that. But long story short, it was interesting because um, the individual I was talking to said, "Well, Coach, I've only got two questions, and those are where do we look and what do we change?" And I just smiled because it's like, yeah, those are the big questions. Where do we look and what do we change? So at this point, you're kind of used to the user interface, but it can get really confusing. It's like there's so much data to look at. Where do I focus? And what minor, small changes do I make? We'll jump right into this. As usual, we'll start with our rankings. Uh, Good work on Red's part. They turned it around, especially in low cost. As you remember, and I'm going to do a little animation here that you can see of the EBITs, what you inherited, where you have kind of the the deep dip in all three teams, the deep dip in low cost, and then also in eco-friendly, where all three teams are low down, and we're going to animate this a little bit so you can see it. Also, I'm animating the white lines to show you some of the differences up and down as we go. We'll show you a little bit of that. But this is really just a technique you can use by taking screenshots of what you see and then moving through them mentally or even animating them for your final presentation and saying, here's what changed in the gaps between what we invested in, what the customer wanted, or how the market changed with what our competitors did. But congratulations to Red. Yellow did fantastic again, kept their lead significantly. Blue dropped a little, but also did better in several lines compared to decision one. You can see a little animation of this first where, you see everybody even, a little very high in family, a little lower, but still positive EBIT in image. And you can see what you inherited was some a really deep dip in eco and really a low down results below EBIT in low cost. So by our first decision, which is also animated, you can see red kind of did a little bit worse in eco, and also we're down a low cost. But in this decision, it crossed over with blue. Blue still stayed along the line, as you can see, and we'll look at that in a second of the current for decision two. Everybody got much closer to EBIT, but red really turned around low cost. They started at underwater and jumped above water above all three teams. So they've started a little franchise there, which is awesome. And also you'll see that yellow maintained their lead in all of them as they jumped up. So congratulations, Red. Keep it up. Blue, you're doing good. There's a couple things you'll see on lost orders over inventory where you could have done a little better, but everybody's a lot closer now, which is great. So let's jump into the bar charts on EBIT. Okay, after our little animation, you can see here we are, and you can see even though red is still kind of down, even a little down a little further after decision two in eco, they made significant investments in both production and in marketing in low cost and built a strong EBIT machine just as high as um, yellow has built in their family and image lines. Yellow is still above water in low cost. Blue has still got work to do, but are doing better than what we were handed there, and about the same in eco. So eco is very hard because you have to make an investment in eco, and it's very hard to do because if you want to add consumption on that slider, it's going to raise your capex really high. So the lost orders over inventory is really tough in that line until about decision four. So if you keep trying to make that work, a lot of times it just doesn't. And yellow, you'll see in the sliders have done good matching it, but have kind of given up on it as the big flywheel machine. They've got the two big ones going in image and are doing great, and in family. So now let's just see the animation, how they changes. I'm going to jump through I'm trying to make this shorter than the other ones have been an hour longer. And the goal is really just to show you the graphics kind of quickly without a lot of commentary so you can take pictures of them and see what you need to change. But in terms of where do we look and where do we look and what do we change? There, we've been through all this. I can just do this kind of with the red team as kind of an example. We'll be showing all of the different curves and that kind of stuff in terms of white market line, but this is our regular interface that we look at all the time. And we have, we have our decisions, we have our markets. I don't know if many of you have gone to the markets, but the markets are a really important place to look at all of the lines in terms of what you're doing and what the competitors are also doing. And you can see all of the statistics and change them, move them around. When you look at a graph, you can move around and see what things are doing on the graph. You can look at places here where it does readouts as you look at the comparisons between the different teams and what they're doing in each area. So you can see company by company right here what the different competitors are doing. And a lot of people said, hey, you're giving us all this good stuff. This isn't even in our interface. Yeah, it is. It's right here under markets. And you can look under company, you can look under markets, you can look under decisions. You can also look at the different teams. So this is a little secret here that not everyone finds. You're looking at company, and it's the red team. Down here's a little click here where you can look at the other teams. This is where you get more information on the competitors. So that's one of the answers of where do I look? This is where you look. You have to go across all these different things, looking at which team. You won't have things like select teams and other things that I have, as your prof, but of course, validators for validators, but decisions then you have to look at your business lines and keep going back and forth with what you're doing with the white lines. So you look at low cost, the value chain, and then the budget. And if we're just doing, let's say, low cost that Red had a great turnaround in. Last time you could see what they did on the market line compared to where they invested. And high gaps here are bad because you're investing too much. Low gaps here, you're not investing enough. But when you're this close here, this is great, this is great, a little above, a little below, but they kind of cancel off, right? Now, these aren't motions in time, of course, but you can animate this. And I have taken shots and done some animations to show you how that works. But these are all your sliders, and when you have a big gap like this and you're investing in something, uh, in this case, it is performance. Low cost doesn't care that much about performance, right? So if you put a whole bunch of money into performance, let's see, where's performance? Look at performance here. What are they wanting here? They're wanting like a 3 and you got like a 5. So that's just this slider. Where do you look is the gaps, okay? And the gaps are just where are the sliders? They want a 3, you're giving them a 5, you're over investing here. You got 130, 140, 180% of engineering instead of 100% hitting the dot. You're hitting the dot real fine here, real fine here. And you can actually look at um, this decision, the previous decision, and the market. So you can see where it was everything when you have enough to have a previous decision, and you'll start to see a red line there. But in several decisions later, you'll see how that happens. But we need to do this so you can see what's happening in all the different lines. But this is an answer to where do you look. And if we look at something where red did not do real well, um, we can see that they backed off in the investment and they followed the market line quite well. But what has happened here in terms of their EBIT is the lost orders over inventory. It's not the engineering. The engineering's done really well. And that was one place on where do you look. But you also have to look at your budget for eco-friendly, and look at the cost of your product sold, and what is the margin compared to your value proposition of your in each period of your the forecast versus what your current is, and then what is your depreciation and how do those match your budget. Now, you also have to, on the where do you look side and what do you change, you have to, every time you change one of these, you have to jump over and take a look at corporate and see what's going on with EBIT and cash flow. And you go all the way to the very bottom. I told a couple of the people who called this, first look at your cash management. It's kind of like how much cash do you have available? I told all three teams, if you're sitting on 6, 7, 8,000 units in cash, that's way too much. You need to invest it in your business. This is not a bad level. I mean, I have teams that go down to like 80, $80 or whatever, but you don't have to go that low. But 200, 150, 300. Invest your cash, put it where you need it in engineering, but also in production. Match those two. And here's your facility investment. Let's take a look at depreciation on the where do you look side. You'll see its depreciation varies a lot according to how expensive your plant is and what you're all doing and how flagship it is. And these are expensive cars. So you've got a lot of depreciation image. Eco-friendly, you've got, what is this, 331.58. Oh my goodness. So you go down here to investment, facility investment, and you've got your key free cash flow and your production budget, and what's going on with your facility investment here. You're not even covering. Why did they do better on low cost? Because they invested. How can these be zero? How can you invest nothing here in these lines and expect to sell anything? You have to invest in your facility at least at depreciation. Or you're never going to get ahead because you're going to have such lost over in orders over inventory. So where do you look equals what do I change? Where you find something where your um, your facility investment, you're not making an investment in your facilities, and you have plenty of cash, then you've got to think about what am I doing in engineering? I'm going to have lost orders over inventory like crazy. So without jumping around too much, but I'm trying to answer the question, where do I look and what do I change? Let's look over to loss over inventory on low cost compared to the other lines within Red Team. Okay, we went to our business lines, and I'm going to show you each one of those. Only we're going to look at lost orders over inventory, which I'm giving you right now. We do this for all the lines, so you have them and you can get an idea what's happening. But look what happened in low cost. Remember, red crossed back over to closer to and crossed over blue. Blue continued to this is a zero line here. Yellow's building inventory in low cost. They're not doing bad because they're making some production, but they're not selling the low cost, and they backed off on it, which is good. But remember, if you keep an eye on what happened with decision two, um, everybody's much closer to the EBIT break even line. Everybody's doing great. It's all three teams are doing much closer, excellent on that line. But red did much better here in low cost. Look at the zero line and look where they got to. This is a big change they made. Is there you go. You can do -2, which is just a little bit below zero. Remember, you want no inventory build and no lost orders. You want to do the right marketing, and then you want to do the right decision on. So now if we quickly do a flash on the other lines of LOI, we'll see what happened with family and look what happened in family with red, where they have gotten to be a little bit positive, where they were dying in a line that they should have been doing well in. And what happened? They matched more the production in family. And here's our zero line here. And you can see yellow's doing great here. This is where blue really had a problem, where you're seeing, are they are they making the cars they need, or are they having lost orders because they marketed the heck out of family, which they should be, but they didn't build enough. They didn't add to that production side and make at least cover their depreciation. But if you're forecasting you're going to do another 20 cars and your capex per unit is 20, it's 20 times 20. I mean, you got to do $400 plus the 400 of depreciation. That's the formula. You got to find your capex per unit, multiply it by the new number of units you want to do at the margin. I want to do another 20, another 30 our forecast, and then add depreciation. That's how much production you need for that next period. That's on the Biz 485 website and many other places. So, and I'll talk you through it as you need it in our text, etc. So you can see how they kind of stop the bleeding there. But let's see what happened in eco-friendly, on the other hand, where they attempted to do enough production, but they did not, in terms of inventory buildup, that they had so much inventory before. They kept the trend line going too far. They needed to, here's where's our zero line. They needed to flatten out here, kind of like Blue has, only not flattening out with all that inventory. You don't want to keep maintaining your inventory by continuing continuing to make it but not sell it. So that's the other side of things. And Yellow again has done great. They've gone from inventory, which we looked at last time, and moved a lot of their inventory. And we can kind of look at some of the pricing decisions, but this is just kind of comparing the four lines quickly. Image is our flagship, and as we remember, Yellow's been doing fantastic. The other two teams aren't doing too bad, but again, Blue, the problem with Blue, and Blue's been doing good. They're getting closer and closer, but they're really having a hard time matching their marketing and their engineering investment to their plant. And you'll see they're just not investing enough in plant. So these are the main things you have to look at and how do they tie back to EBIT. And that's your story for the end. This is where you look. What do you do about it? When you have too much inventory, you can lower your price a little bit, not a lot, a couple bucks. If you do too much, your demand will drop down to zero or you'll destroy the market, get a lot of revenue, but no profit. Don't lower it so much you can't make any money. If everybody keeps their prices up, you're doing great. The whole universe has to keep them up to make money in this sim at all, to get any EBIT at all. But you can see that as you're building, where do I look? You look at lost overs inventory as a team and you say, each person that took a couple car lines say, this is what I want to do with my line. But then as a team, where do you look? You look at the overall results of all the car lines, bang, 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 all four of them, and say, okay, we can see we're building inventory here. Not terribly, but we want to get down closer to the zero line, just like Yellow here. Yellow's winning. Red came in second and changed now because Blue really in this period had a lot more lost orders. They invested a lot in image but didn't make enough. They did really well. They said, let's market it, but they didn't do the production budget to keep up. So if they said, we're going to sell another 40 units or 30 units or something, we're going to sell in this next year, in this next period, but they did not multiply that by the unit capex and then add back the depreciation and get the amount they should be producing, and they have a whole lot of cash left, like 7 grand or 700 million or whatever the seven means, 700,000 units, then it's like, wow, some of that money should have really been put into image production, not, not just image marketing to get the orders, but we also need the sales, the deliveries. So let's get back to our white market lines. So again, where do we look? Look at your sliders, then look at your budget. How does that relate to your budget? Look at the information I gave you and I give you every time on what your EBIT was and what your EBIT needs to be and what you need to change. And then jump over to, this is a budget within your sliders. And then your second budget is you go to decision, you go to corporate, and let's look at our budgets here in corporate of what are we investing in our facility here. And you got to have facility investment in each of the lines. Otherwise, you're just selling your inventory. You're not making any more. If you don't want to make any more, at least add back the depreciation, or you're going to start having problems with morale. and also with revenue. But again, this is pretty good in terms of cash management compared to how much some of the other teams had left. Let's jump up to, we've looked at the various markets. Let's just do some quick snapshots. So you have them. Low cost engineering, marketing. See what we need to do there. Family, we should be making a lot of money. There's a few gaps, not really bad gaps. You're really getting the idea what family wants. Now it's just matching supply and demand. Doing very good in eco in terms of what the customer wants. That's half of the battle is what do the customer wants. And decision two, Red has stopped the bleeding a lot, but they're still not positive EBIT because also of the lost orders over the inventory and needing to make that the ones that they're selling and doing. They did much better in revenue as we saw. Uh, and also doing really good managing what the customer wants in image. Okay, blue team, and see where the gaps are there in low cost. Blue team didn't break into positive, but didn't do real bad in low cost. There's a couple of things they can, knowing of what happens with low cost in terms of especially um, like size. They don't need as much size as you can look at what four versus maybe three. What do they want in size and low cost? It's a compact car. And look at family. And again, they were positive in family, so these much match fairly well. They do. And let's go to eco, where everybody got killed and red got killed the worst. And still not too bad. The size is again an issue we're having with blue. And these aren't terrible either. You're doing some really good matching. You've really gotten this down. What do we need to do of what engineering is needs? Uh, Performance, this is only can be image because performance, you never spend that kind of money on performance and the other lines. But again, seven isn't bad as long as you know that the capex is going to go up for production, so you're going to have to produce more for image. And that's even though they're positive in EBIT, you could do a lot better if you look at the loss over inventory in image for blue. Now, there's an old saying that goes, emulate the best. All right. Yellow's doing just absolutely fantastically. They're matching very well. Low cost, you can see that they have a lot of kind of, they're not blowing the doors off, but they're not losing money because they backed off a bit. On family, where they're doing much better, they're leading family just like they are in image still in decision two. They're much more aggressive with the sliders, you can see, but they're also very close to, they're underinvesting a little, but it's better to underinvest than overinvest. You might be at 85 or 95% on marketing. And if you're making enough, you're going to still do great. You'll make a lot of money. So, all right, what are we doing with eco? Everybody except yellow is still being killed in eco. Um, Performance, they're investing a little more, but not, I mean, a four versus five is not a big deal. That can fluctuate with what everybody else invests in. So that's not terrible. But you want to look at your gaps again. That where do we look? What do we do? Adjust that slightly, but also forecast what we need to do if we are going to sell more. What do we have to do with production? And the line they've just blown away every time. Image they really have down. What do the customers want in image? You can see Blue's problem right here in terms of what are you doing in marketing compared to what you have? How can they like not at all market and not get orders and still do okay because you're selling off your inventory at the price that you're pricing it? There's your capacity that you have in each of those to make. And so you really have to spend more of this money that you have in reserve on marketing. And we can look at the revenue numbers and the individual lines also. Let's quickly look at yellow. You can see these under markets, which I showed you before. So remember, this is just your budget. What are you budgeting? So if we compare what their capacity is, and their capex per unit. This is where it's like, where do you look, what do we do? This is where you look for your capex per unit. So you figure out what are you going to do? What are you budgeting, or what kind of sales do you think you're going to get? And which are deliveries. What do you think you're going to deliver from your inventory? And you take and you multiply that and add back depreciation. Where's our depreciation here? Negative 69. They should be at least negative 69. Yeah, they're negative 69. So there's no zeros here. They're covering their depreciation. And are they actually targeting this market? Well, no, you can see what they're targeting are family and image and eco-friendly. They're doing okay, but it's nothing close to what they're investing in family and image. So you can see these are low investments, but they're keeping their workers happy by covering depreciation. You can see depreciation numbers there, but they're actually, you're going to have more depreciation if you have invested more in the past also. So, all right, maximum loan. Okay. Yellow still has a lot of cash available. There, you can still do more building up those two lines, but they're being very careful and conservative in terms of not overdoing eco and low cost where you can get killed. But they're also not building a flywheel there. And red has an opportunity to build a flywheel there in low cost now that their later decision low cost grows a lot. And since they're already positive in EBIT, you can invest more there. Let's go back to some of the numbers which you already have, but I want to give you some detail here that you can analyze if you have the time to do it. So these are the numbers that you can look at in terms of what's going on, what happened with revenue here. And Red just really corrected that by doing a great job of hitting where they want to sell in, especially in low cost. But, they also did better in image. They, from decision one to decision two, they went deeply negative into somewhat positive in image too. So Red's really done good. They didn't jump up a place by not doing the work. So you can see what's happening here with the revenue. You can see what is happening with Blue Team in terms of their EBIT under not only the main, but each one of the lines. So this is a summary, but let's look at low cost and let's look at, you can see yellow actually priced a little more to take a little more profit out of low cost. And indeed, they did break into positive EBIT by doing that, but they didn't do a huge amount. And remember we saw they didn't invest as much, match those white lines. I said they might be at like 80 or 90 instead of 100 and something. Well, yellow did. They're at 80, 77, not 100, and 82 here, but they're really up there in market appeal. So low cost, it's just kind of look at the red numbers here in terms of comparing them. And what is blue done? Where did they get in trouble in terms of revenue? They had revenue trouble by not investing in low cost marketing. And you saw that that was down. And this is significantly different here, although the price is the same as red. So let's switch over. Okay, you can also look at the bottom here in terms of what is their inventory, which should be, around, it shouldn't be zero. It should be maybe 10, 12. Well, his year it's 13 on yellow. So you can see what is the total. And these are just, you'd have to figure these out to see what the inventories are line by line, team by team. But I just give that to make it easier for you and quicker. Family, keep an eye on the red, what happened there in terms of being above or below the revenue. Um, Family on red, they stopped the bleeding and they got into somewhat positive territory, but they're kind of at break even, um, a little below maybe. Yeah, a little below. There it is, like minus 32 compared to 2 compared to 6. So this is, a flagship line, family and image. And that's where red can make some changes like they did with low cost. Let's go over to where everyone always gets killed. Yellow's the only one that didn't get totally killed, but you can see what happened with blue here in terms of revenue for eco. And then let's look at the production numbers. Uh, they should be somewhat similar. Okay, there's a little bit. Yeah, here's production 45, 46, and 52. And then you have to jump to the budget place. Where do you look? What do you do? Once you see what your invested is, go on your budget, both under the sliders and your budget, corporate budget, and make sure the sliders are for the individual car lines, and the corporate budget is what do you want to do overall in each line in terms of investment. And you have to just do the trade-offs there. Um, Red was still pretty much in trouble in eco. Let me see if I can find where it was. Well, here, yeah, well, the EBIT is down, but also um, the capacity used. You're again, you have the capacity here, but you're not getting the orders. You're not putting the marketing into it, and you have a lot of excess cash. So there's a tip on what you do when you see a number. Where do you go? Where do you look? You look here when you say, "Wow, this is 30% compared to 80/80." There's someplace we're going to want to invest. Our unit cost is higher because we're not, whenever you're not doing capacity, you're not spreading it, your unit cost is going to be higher because you have to cover the fixed cost of the plant. And if you're not selling enough your unit cost is going to go way up. That's what's called operating leverage. You know what financial leverage is debt to equity. Operating leverage is, are we covering our fixed costs or not? And then let's see. And we have our flagship for everyone, which is everybody's got good marketing appeal because they're all investing in image. Um, red, well, red should be making more. Red and blue both have some room to do well in image, and yellow's doing fantastic. So we can just look at some of the difference, and especially go down to your how much capacity is used for red and blue. Okay, yeah, see, so we're still having issues with marketing here with Red, and they have excess cash. So you can put some of that money into marketing there and still not destroy yourself in production wise because you've got a lot of room to go there. And it's probably going to have a high unit cost too. Yeah, look at the unit cost here. Now that's way, way higher. So your unit cost and image, it's not that you're pricing it too high, you are, to an extent, you're pricing it too high compared to the other teams. What are you pricing it? Let me see. Oh yeah, way, way, way high. Yeah, this is much, much higher. 150 compared to one is going to really cut down on your demand. That is way, way too big of a price jump. So that's one of the reasons your revenue's not where you want it to be in image and why you're not using the capacity that you have, that you made it. You did good with marketing and you matched it to the capacity, but you want this at 80, and the way to do that is not to sell it at 150. So that's, where do you look? What do you do? You look at this and you say, where's parity? How do we get close to the team as a whole market? 5 points over, 6 points over is not stupid on Yellow's part. They're taking some profit here. And their marketing appeal is probably similar. Yeah, so you have a ton of marketing appeal here. You did a good thing, and by saying, hey, we could bump a price up a little here, Red, in image, yes, that's right. You can, but not this much. I keep saying this price is extremely elastic, and you're going to have that facility cost, and then your unit cost is going to go way up, and that's going to just destroy you in terms of lost orders over inventory, and also not going to get the profitable demand that you need to get the revenue that's profitable revenue. So get this down there closer to where these other teams are at, and keep going on your marketing and production, then you'll get your unit cost down. Because it's just spreading your unit cost. If we have engineering, pretend it's like research and development. The bigger installed base you have, the lower your unit cost because above the operating level, above the break-even point of your operations capacity, um, it's like printing money in the basement. So is financial leverage. And below that, it's like drowning, where if you're below break even and you have a lot of leverage, either operating, your fixed cost is going to kill you. So you're going to drop into the fixed cost territory, and your unit cost is going to way, way up because if you're not selling enough because you don't have the price right here. You went way too high. And remember price elasticity. I had a couple of questions on it, this unit. If you're very elastic at a certain point on your demand, downward sloping demand curve and your price here, quantity here, you're going to end up having not being able to cover your fixed costs, and unit costs are going to go way up because you don't have a lot of units to spread those costs over. You got to get the units going by having the right price and taking a little. It's a trade-off with profit, of course. This would make you um, a lot more profitable to have higher prices, but you need both. I mean, you're doing better even with this big price than blue is, but look what's going on here with yellow because they did keep this a little higher, but not a lot higher. So they got the EBIT and they got the revenue. They got both. So you have the right idea. It's just the wrong amount. You know, it's I've seen universes at a certain now the demand curve. Remember, price elasticity is not the slope. It's related to it, but it actually can vary at different points of price and quantity. So where you see what the market's doing and saying the market's all about here, this is a close to a price point, you don't want to jump up 10, 20, 30 because your demand could drop literally to zero and then you'd only be selling inventory. You know, I mean, even if you're not, you might even not even be selling inventory. You know, you might be not selling anything at all because you're so high priced that only a handful of people are going to pay that for all the features that you put into image. So that's it. I tried to go a little shorter today, and I have lots more of these graphics that if you request them, I send them. The only thing is, if someone requests them on their team or another team, I have to share with everybody. So I'll post it in announcements what I shared for everyone's to just to keep it fair. That being said, we will see you in Halo and the text groups and keep on going. Good job, Brad. Good job, all three. You all got really close to that line in EBIT. I love the animation. All right, take care.